China is quietly stacking gold. It's not a game. It could remake global power and your financial future. In this video, we'll uncover how China may be laying the foundation to replace the US dollar, why it matters, how fast it could happen, and what you need to do today to protect your wealth. You don't know me, and that's fine, you don't have to. Think of me as your guide through the shadows of global finance, a place where power isn't just measured in money, but in control. For decades, one question has shaped the modern world: who controls the money, controls the world. And now, a new challenger has entered the arena. Is China quietly building an alternative to the US dollar-backed system, one that could rewrite the rules of global trade, wealth, and influence? Because if the answer is yes, the stakes couldn't be higher. While you're working to grow your savings or plan your retirement, inflation silently erodes your dollars. Every time the Federal Reserve prints more money, your purchasing power slips further away. But imagine another global currency rising. Backed not by debt, but by gold. A system designed to challenge America's financial dominance and reshape how value flows across the planet. This isn't just geopolitics. It's personal. It affects your investments, your future, even the price of your groceries. So the question isn't if the world is changing, it's whether you'll see it coming in time to prepare. Let's start by understanding what China has been doing under the radar, moves that could soon turn the entire global economy upside down before it's too late. Describe how China's gold reserves have grown over the last decade, e.g. via its central bank. Show trends, reserve levels compared to past years. While many assumed China trusted the dollar, its actions tell another story. But gold is only part of the story. What does China do with that gold, and why? Explain gold's properties: scarcity, store of value, not subject to inflation or government debasement the way fiat is. Compare with dollar liabilities. Yes, I know, gold isn't flashy like Bitcoin, but maybe that's the point. So stacking gold is one thing. Using it as leverage is another. Explore evidence that China seeks to settle some trade or commodities, e.g. energy, raw materials, in non-dollar terms, possibly tied to gold. Cite reported pilots, proposals, or announcements, e.g. petro-yuan or gold-backed currency discussions. If more countries accept non-dollar pricing, the US loses pricing power overnight. But how far has that ambition gone? Let's look at geopolitical allies. Show how China pushes its influence, Belt and Road, trade partners, to adopt Chinese-led alternatives, currency swap lines, clearing systems. Link that to reduced reliance on SWIFT/dollar rails. Imagine if your next flight ticket was priced in yuan, tied to gold. Unthinkable? Maybe not. These aren't isolated projects, they scale to entire regions. Explain how China's digital currency infrastructure, digital yuan/ECNY, could allow gold-backed settlement under the hood. Discuss tokenization of assets, blockchain-backed gold-linked instruments, where applicable. What if a click on your phone transfers value backed by real gold stored in vaults halfway across the world? But even with tech, the backbone remains political decisions. Dive into what makes a currency reserve currency: depth, trust, central bank holdings, liquidity. Lay out how China's strategy threatens some of those pillars. If foreign central banks shift a fraction of their reserves away from the dollar, interest rates go up, the cost of your mortgage might rise. Okay, but how realistic is that shift? Let's talk timeline. Analyze realistic speed, decades versus years. Consider inertia of institutions, legal agreements, trust. Present optimistic versus pessimistic scenarios. Even a slow shift over 10 years affects millennials or Gen Z saving for retirement. Now, China isn't acting alone, let's compare to what the US is doing wrong. Fiscal deficits, debt levels, inflation concerns, political polarization. Lack of trust in US policy, interest rate swings, central bank independence concerns. I mean, nobody likes watching Congress bicker, but it matters more than your favorite TV show. With that combination of opportunity and vulnerability, what does China gain, and what do we lose? Personal level impact. currency depreciation, inflation on imported goods, effect on stock and bond markets, real estate pricing. Fear of eroded purchasing power, excitement of opportunity if you move early. That leads to the big question: if you believe this shift is coming, what should you do? Diversification strategies: hard assets, precious metals, foreign assets, real estate, digital assets. Compare pros and cons. But choosing assets is only part of the strategy. Mindset matters too. Asset allocation suggestions: percentage in gold or gold-linked instruments, emerging markets exposure, inflation-hedged instruments. Use realistic examples for a 20 to 40-year-old building long-term wealth. What if your portfolio becomes a hedge against systemic change, not just another stock bet? Still, skills and knowledge matter. Let's talk about guarding yourself from misinformation. Emphasize tracking central bank reports, alternative currency alliances, trade agreements. Encourage following reputable research, IMF, BIS, academic/financial think tanks. Yes, even your favorite finance TikTok influencer can't replace digging into real data. And because this shift isn't theoretical, some early adopters already exist. Cite countries using swap lines or trading in alternative currencies, e.g. Russia/China trade in non-dollars, commodity exporting nations exploring non-USD pricing. Explain what that means in practice, and what momentum that gives China. Momentum builds slowly, but once it breaks a threshold, it accelerates. Talk about trust, perception. If just one large economy shifts, it changes the mindset of other central banks and private sector players. Confidence is fragile. Once trust in the dollar cracks, panic can spread. You could be among the few who anticipated it. So what does that tipping point look like, and how close might we be? Lay out 3 scenarios. Base case: gradual partial shift over 10 to 20 years, dollar retains dominance but loses some share. Worst case: sharp geopolitical event triggers rapid shift. Best case: U.S. adapts policy, dollar retains dominance but with higher rates/volatility. For each, illustrate what that means for inflation, interest rates, returns on savings accounts, and retirement portfolios. Given those scenarios, where should you position yourself now? Provide a checklist. 1. Assess your current exposure to USD-denominated risks. 2. Consider allocating a portion of your portfolio to gold/inflation-hedged assets. 3. Consider international diversification. 4. Stay informed with credible sources. 5. Update allocation periodically. Every year you wait is compound risk building up behind your back. You might still ask, is this overblown? That brings us to the final act. Address skeptic viewpoints. The dollar has decades of inertia. Institutions won't move overnight. China still has limitations. Provide balanced perspective, why those skeptic points matter, but also why they may not be enough to stop the shift. Calming fear with reason, but reigniting vigilance. So although risk isn't guaranteed, it is real. And you can't assume safety by doing nothing. Paint a future-oriented vision. Imagine your retirement funded not simply in dollars, but in assets that preserve value even amid monetary upheaval. Encourage empowerment. You are not powerless. You can choose to build resilience into your financial life. Build excitement and urgency. By the time the world notices the shift, your preparation will set you apart. Recap the core thesis. China is pushing below the radar to build alternatives to the dollar via gold accumulation, trade settlement strategies, and diplomatic financial infrastructure. The shift may not be explosive tomorrow, but the seeds are being planted today. Your wealth depends on your strategy while you still have time to act. If you want to stay ahead of global shifts and build a portfolio that weathers uncertainty, hit subscribe and turn on notifications. Share this video with one person who cares about their future. And I invite you to download the free checklist in the description, your first step toward building a resilient, future-proof financial plan. The coming decades will belong to those who prepared, not those who hoped. Let's build that future together.